The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 20th terrific Thursday edition of today's of the Money Masters show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs. You know, like a farmer, please allow me to plant what I think are some seeds of wisdom to think about. Seed number one: people are unreasonable, illogical, and self-centered. I say, love them anyway. Number two: if you do good, people will accuse you of being selfish. They'll accuse you of having ulterior motives. Guess what? Do good anyway. Number three: if you're successful, you'll win false friends. I know this to be true. And you will also find true enemies. Guess what? Succeed anyway. Number four, seed number four, that is, honesty and frankness, well, they may make you vulnerable. Guess what? Just be honest and frank anyway. Seed number five, the good you do today will be forgotten tomorrow. How many of you out there know that to be true? Yep, all of us. Guess what? Do good anyway. The biggest people with the biggest ideas can be shot down by what? By the smallest people with the smallest mind. Doesn't matter. Think big anyways. Number seven, people favor underdogs, but always follow top dogs out there. You know what I say, folks? Fight for some underdogs. In fact, those of you that are playing the bracket challenge, I haven't done mine yet, but I would assume that most of you are. At least if you're a basketball fan, you're going to go do the, I don't know, are they calling it the Buffett billion or what have you? But maybe there are some underdogs. Who can tell me who's going to be the underdog? Who's the underdog out there that is actually going to, because I've got to go back and look at the chart. There's always an underdog, right? Makes it into maybe the round of 8 or something like that. So who is that underdog? Hey, number 8 out there. What you spend years of building may be destroyed overnight. Guess what, folks? Build it anyway. Number 9, give the world the best you've got. And guess what? You'll get kicked in the teeth. I say give the world the best you've got anyways. My goal, as always, is to give you the best that I've got, and I'll do that here for the next hour. And trust me, I've been kicked in the teeth a few times. Well, maybe not kicked in the teeth. I can say that I lost my 2 front teeth by snatching a slap shot out of thin air. Now, of course, I didn't try to snatch that slap shot. I just simply got in the way of it. And that's something that I suggest that you do, but guess what? I did it anyway. Well, let's go check out these markets out here. Right now, we've got the Dow up 39 points. It's trading out at 16,260. The S&P is up 3.5. It's trading out at 1864. NASDAQ Composite up about 6 points, trading out at 43.13. Russell 2000 up $1.30. It's trading out at 11.97. We've got Apple down $1.20. Microsoft up 53 cents. Google up $7. Chipotle is on fire. That is leading the charge. The upside here. I had a few peppers yesterday. Well, this one is on fire. It is up $10 right now. It's about 1.76%. Well, I'll have to go take a look and see where that is headed to. Google's up $7. It's up 0.6%. Netflix is up $6, up 1.5%. Alta Salon up 4.5%, up 470. Precision Castparts, PCP is the ticker symbol. It's up about 1.5%, up $4. Burlington Stores, it is up 13%, up $3.50 out there. X1 leading the charge to the downside. X1 is off 8% this morning, down 340. Amazon is off $2.90. Bally Technologies, BYI, that's off 3%. Amazon down about $3. Under Armour off a couple of bucks. So Fun, not having so much fun this morning, down $2. Our call number is 877 927-6648. Give us a call, folks. We'd be happy to take a look at your call here. One of the things that I did during the break out there, during the break between the two shows, was we had a call in the last hour from John in Philly. Most of you in the den, you know him as Z-Man out there. You know him as Z, really. And we got to ask him about that. He was asking about the P-index dates, and what I did years ago as I started to investigate planetary configurations and their impact on markets. I wanted to really understand the probabilities. For me, it's always about mastering probability. The edge for me means being able to have some type of statistical probability and just simply taking that trade. It was why, we took a trade yesterday. We're long the market here at this moment. And it was really all about a probability. Now, when the market responded to Yellen's information, I sent out a newsletter update to folks and said, hey, here's the deal. We entered the trade because of these 4 things. 3 of those things haven't happened. Here's why I'm a little bit leery about this move down. So if you wanted to go ahead and get out of the market at break even, go right ahead and do that because it gave you the opportunity to do that going into the close. And I said, I'm going to go ahead and stick with this trade out there. Now, the question, though, and I digress, my apologies, but to me it's really all about trying to find a statistical edge, a statistical probability in the marketplace. And so the question came up about the planetary index date that is occurring this Sunday. Is there a tradable advantage there? So I'm going to first go to that stock chart. And I went back to, I took the Dow chart back to 1929. I actually had the data, well, I've got the data for 300 years. So, but I can tell you that beginning in 1929 through today, or really through this Sunday, I should say, there's 545 planetary index dates. That means that there's enough of a sample size to determine whether or not there is an edge in playing something like that. Let me get rid of this Kerry stuff and this Putin stuff that I had on the chart out there. And it looks like I've got some other Jupiter stuff, square Uranus. We're not going to pay attention to that. But some of the green boxes that you're seeing on my screen out here, apparently add some other data in there. So what you are seeing are 3 planetary index dates. So if we take a look at the last one, so we've got one that's coming in on Sunday out here. So if we take a look at the last several, and then therefore you can go ahead and make your own decision with regard to what it is that you see. So when it says near on my chart, that means that it's coming in on a weekend. So if it says near, it means if you go take a look at March 9th was not a trading session out there. The Friday was March 6th, Friday was March 7th, and Monday was March 10th out there. So I don't know whether it should be the swing point the day before or the day after. Nonetheless, you can see March 9th as a 3 planetary index date. It marked a high out there. And I would have to say, if you were looking for planetary index dates to mark a change, I'd have to give that one as a winner out there. How about the one prior to that? Well, you had January 13th, 2014. Now, the way that I like to use these is you like to be able to take a look at has the market been moving up or down into that level. Now, on January 13th, there was also a 3. Now, these I'm only looking at P-index dates that are 3. Now, what you would do is if you were to go get the New American Ephemeris, you can see that each day it lists the number of planetary, both major and minor aspects that are occurring on that day. What you're looking for is when things get lopsided, when there is only 3 or less, or 14 or more, when they happen to all line up on the same day out there, and that's really what you're looking for is, where the world in essence is a little bit lopsided out here. So you'd have to say January 13th, the market had been kind of moving up into it. It really had made a high out here on, as you know, on December 31st out there, and then kind of just chopped sideways. I'd have to call that a sideways chop, and the market most certainly did move lower into the lows out here in February 5th. So I'd have to say that 3 p.m. index day worked out here. Now, in the case of the one that took place October 26, 2013 out here, if we go back a little bit further, kind of tough to say that one actually worked because the market here was moving up. The actual day, the 25th, if I were to try to put this here, I'd have to probably see if I can do this. Yeah, okay, I'll just put it behind it. So here, the black, if you're looking at my chart, the black left-hand side of the box that we're looking at here happens to try to mark the actual day that's out there. So I'd have to say that one failed. So now we've only had, we're 2 for 3 out here. If we take a look, we're not going to look at this Jupiter day. I'm going to go ahead and just delete that off. But let's come back here to August 5th. So market moving up into August 5th. The actual high out here that came in the market was on August the 2nd. So August the 2nd, the market makes a high. August 5th was the very next day out there. So Very next trading session in August 5th certainly marked a high out there. Something to think about. Some of you may want to thank Z for asking about this. Or you may want to thank Larry for having created it, or you may want to thank me for actually being able to plot it on a chart out here. Let's come take a look at June 30th out here. So June 30th, the actual market makes a low on June 24th. So pretty tough to say because the market had started to move up. That the June 30th level really worked out there. I mean, for me, it'd be a stretch. Now you have to start saying, hey, that these things occur within 5. They've got an orbit of 5 trading days or what have you. You know, I like things to be a little bit cleaner than that when you're trying to justify. So now we've got, 3 out of 5 that have worked. You know, is that a statistical edge? Well, come back, take a look at June 9th. So on June 9th, the market actually made a low on June 6th out here. On June 9th, June 10th, it made a bit of a high, and we saw a little bit of a turn down for, about 3 trading sessions out there. In any event here, I'll go ahead and keep this chart out there, but hopefully that helps you folks that were listening on the first hour maybe to kind of get a feel here. But what I would have to say is if you look at certainly coming back here from around the August 5th time frame out here, if the market's going to go ahead and make a high, maybe the next turn is actually coming into the market. So we should see a market that would trade up today, trade up on Friday. Maybe it'll continue to trade up forever. That I don't know, but maybe you'd want to be paying attention to Monday's trading session out there, knowing that you've got a 3 planetary index day, whichever way the market moves, right? This market could sell off and just move lower, and then you'd want to go ahead and take a look at a potential trade that way. So let me go ahead. What we'll do is we'll follow back up on this on Monday, and if I forget to do that, well, then you just remind me. So I'll put 3 P index dates out here, and then we'll be all square and all set. That's the beauty of building tools like this, because, you know, you just like to be able to plot things out there. And one of the reasons that we actually went long was because of something that I had plotted. We were able to go back and take a look at on the charts out here, and we just said, hey, there was an initiation move that actually took place in the market a couple of days ago. And when we went ahead and we applied that to the charts out there, at least I was actually, somebody had written me an email and said, hey, they'd asked me about this one specific thing, and I hadn't found a statistical edge on it. When I went back and redid the work, and I did that a couple of days ago, my eyes were opened up again, and which was pretty cool. So there was an initiation move that took place in the market a couple of days ago, and it's an initiation move that had taken place several other times at significant bottoms inside of the market out there. So it was enough of a statistical edge for us to have said, hey, let's consider taking a long trade in the markets yesterday. In any event, let's go take a look what the markets are doing out here. You know, if you were catching the first hour of the show, we were taking a look at the 120-minute chart and the importance of being able to identify where bulls and bears are hanging out here. We had this nice little hammer candle that had formed at 8 o'clock this morning. Clearly that has held at this stage. Look, there's going to be resistance. Definite resistance at about 1867 or so. You've got the ES Mini trade at 1858 right now, so we'll see if the bulls can overtake those bears. Dow's up 63, S&P is up 6. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow here. Give me a moment. Multitasking totally. So if you are a subscriber of mine and you are in that trade from yesterday, what I'm doing is sending out a email alert just telling you to go ahead and move that stop to break even out here. So we've got the we're going to go ahead and let this thing run. Nothing like being able to be in a trade here and know that you can't lose out there. There's not enough of a profit necessarily to want to go ahead and try to tighten the stop much more than that. Now, I'll explain to you the reason why it is that we're going to go ahead and tighten the stop that much. Just give me a minute here because not everybody has a chance to listen in live on the show, and so I'm just a couple of keystrokes away from being able to send that out, and then I'll send out a Twitter text alert. Oh, geez, it didn't go out. Okay, I'll be able to do that. It's not. I don't have to worry about doing it right this second. I'll do that here. When we get to the next break in 4 minutes. In any event, the reason that I'm suggesting that we're going to go ahead, because we are long in that spot here, I'm going to come over to the New York Stock Exchange. And we take a look at the New York Stock Exchange, so the wider swath of the marketplace out here. We take a look at it. You know, yesterday it dipped back below the 2007 line out there. 2007 highs is really what I'm talking about. But what was more important really about yesterday's session was the mere fact that that price oscillator had moved back below the zero line. So when the price oscillator is above zero, basically the summation index is turning up, and it's a really nice a tool to help you understand the trend of the marketplace out there. It's not the ultimate tool, but it's a real nice tool to use in helping you to identify the trend of the marketplace. And it had gotten back up above that level and then slipped, and that was not the initiation move, by the way. So just I don't want you to think that was the deal out there. And it was like yesterday was a one-hit wonder where it dropped back below that level. in the marketplace. Now, there was some pretty good momentum to the downside breadth-wise yesterday. In fact, so much so, let me pull up my newsletter here. I can tell you at the top of my newsletter each day, I indicate what the number of net advancing or declining issues are needed. So what's needed today in order for the bulls to take back control of the market and having slipped back below that zero line, that's really important. That would be really important today. They would need 1,179 or more net advancing issues out there. Now, with this little bounce that we've seen in the market here, and I'm going to call it nothing more than a little counter-trend rally right now, because when I take a look at net advancing or net declining issues, we've got net declining issues in the NYSE. So you've got your minus 294 out there. That is not what one wants to see. So at this stage, I'm going to go ahead and say that the bears really on the intraday time frame, I'll go take a look at a day, well, even on a daily time frame here, when you take a look at the New York Stock Exchange, it's really the bears that actually have the advantage. Whether or not they're going to be able to do anything with it, I don't know. But with a decent bounce in the NASDAQ composite and so forth, you really shouldn't be seeing net declining issues. That's telling us here, what's telling me is underlying there is some problems out there. So there's some problems in River City, and hence the reason to go ahead and move that stop to break even. So I'll get that email out and the Twitter alert out there as well, and we'll just simply be in a no-lose trade out there, and that is a beautiful thing. Now, let's go take a look at what's actually going on inside of the let's put up the Rhodes Momentum Indicator charts out here. It'd be a little bit easier for me to take a look at. And let's go take a look at the daily charts. Actually, let's put up the daily charts, and let's go start off by taking a look at the S&P 500. So we'll take a look at the S&P 500 right now. S&P 500 is still in the bullish mode out here. We got a nice little Rhodes Momentum Indicator signal here to go along the market. That took place on March the 17th out here. He had some nice follow through on the very next trading session on March the 18th. Yesterday at this stage here, unless we see it close below about about 1860 here today, and that's really the number to be paying attention. Well, the real number, 1860, would start to get into a cautionary type of a zone out here. The real bearishness comes if we were to see a close below the March 14th lows out there. The March 14th low inside of the S&P 500, that is 1839.57. You're trading at about 1866 here right now. And so at this stage here, everything looks okay. Now, when you get it closed, if you were to get it closed below that session for March 14th, you'll see there's no swing pointer. There's no base that has been built. It would just simply be some kind of retracement level. But even a retracement level doesn't have any kind of a swing point or anything for you to try to duck your head into it. And that says it closed below that session should be a free fall all the way down to the February 5th. That doesn't mean a free fall like in one trading session. Not that couldn't happen. It just means that becomes your magnet, the February 5th lows. But at this stage here, the S&P 500 is still in bullish mode. Right now, the Dow is up 54, S&P is up 5, NASDAQ composite up 12 points. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 63 points right now. S&P is up 6. And, it's interesting. I've got the silver chart up on my screen right now. It's a daily chart. And we were taking a look at that earlier this morning. Notice that it had made the 0.618 retracement. Now, I was using the swing point out here, the swing point low. From back in December 31st. That's where we really saw a nice sideways consolidation. We saw the breakout of that consolidation. We saw the actual measured move of that consolidation. So beautiful pattern. I mean, really, that took off on February 14th out there. So really didn't give you an opportunity to get in if you were waiting for a close of the end of the bar out there, because just too much wide, it had moved too far away from the consolidation. As it had opened on February 14th on Valentine's Day out there. But the actual 0.618 retracement from the low here on December 31st to the high that was put in on February 24th out there, the $20.04 would be the number. But I don't have to use that necessarily as a swing point. We can use the bottom of the consolidation here, the most recent swing point low, which was January 30th. So if we use that swing point to the high out here on February 24th, you'll see that 0.618 number is $20.19. Now, what's important here is the close. Not so much the extreme emotion during the trading session here. What's really important is the body of the candle. And the body of the candle right now is trading out at 2040, which is really the top of the consolidation box out there. So silver, if this is how it were to close, somewhere around 2040, 2045 would be nice, but 2040 works out there. And then you see some type of bullish candle that were to take place tomorrow. That would actually go ahead and potentially set up an A to B equals C. We know that silver wants to join its cousin Goldilocks out there by busting through its price channel. We know that it wants to do that. What it's got to do, though, is get above the price channel line out here that it has not been able to do. But making a 0.618 retracement, that's normal. Holding a support at the top of a consolidation box that it broke through and it never came back and tested. And today could be the test out here. This might set up for the next move up inside of gold. We won't know that till we see how today's session closes, until we see the signs that are painted by the bulls and bears out there. So that's something we'll want to pay attention to. Most certainly out there, or at least I'll want to pay attention to. What were some of the reasons? What was another reason why I went ahead and stayed in the long trade in the S&P 500 yesterday was because with the market being able, with the way that the market was pushing lower, I wasn't seeing much in the way of any kind of resolve when it came to the euro Japanese yen. And there is no better currency pair to identify the liquidity of what's going on in the overall marketplace. And this currency pair here, this tracks the U.S. stock markets better than any other currency pair out there. May actually track a couple of the other stock markets, but I'm only paying attention to the U.S. stock market out here. And yesterday, as the S&P, as the Dow, as the markets were pushing lower, the euro Japanese yen was actually not budging, or actually was pushing a bit higher out there. So I was going to say, all right, well, there's a little bit of a disconnect here. I'm going to go with the currency pair because the currency pair is a much larger marketplace, and I felt the currency pair is really telling the story. What we see here now, it's not as if it's given us the most bullish case. In fact, it's got a bearish pattern. It's got a active, confirmed bearish pattern. But what we got, where the real fight is between the bulls and the bears out here, happens to be this little breakout session from March the 6th. And until we see a price breach of that low, which is not just a breach, a close below 140.41 out there, then it's a tug of war that's going on out here. And I don't know who's going to win the tug of war. So on the tug of war, I'm going to have to go with the larger trend that's in place. That larger trend on the daily charts out here is the one that says right now it's the bullish trend that's in place. But see, I'm agnostic when it comes to the marketplace out here. Whatever the market wants to do, let it do, and it'll just simply go from there. So I do not have a problem flipping from long to short. You prefer to be able to find something where you can stay in it for a longer period of time. But in saying that, that means now we got to go take a look at where we at inside of the market. So if I go back to the S&P 500, just as an example, we ought to use that as an example here. And if you take a look at from December 31st to where we're at right now, December 31st, the high or the close was 1848. You're at 1866 right now. The market, in essence, has been chopping around. In fact, from December 31st, we saw the move lower. Then we saw the move all the way back up to make that 100% move, make that little V shape out there. That certainly is a bullish pattern that is still in place. It's not exactly like this is the best V shape that we have out here. Is this an inverted head and shoulders pattern out here? I'm not the, other than, at a younger age, I guess, having to use head and shoulders, I'm not a head and shoulders guy, only from the standpoint that I haven't been able to find software to be able to go out and take every head and shoulders pattern that I could find and trade it to see if it gave us a statistical probability edge out there. And, the lack of being able to do that is a reason why but this could be the head, no question, down here at the lows in February 4th out here. And the left shoulder, I don't know, what would you, if you were a head and shoulders expert, what are you going to use? Are you going to use the January 15th or are you going to use the December 31st? Let's use both. If we use January 31st, and you're looking, I got to grab the right tool out here. I'm going to grab my cycle tool because a head and shoulders pattern shouldn't have to be forced right. So I'm just using from a time standpoint out here. Well, that didn't work real well. It's just, it says that March 3rd. I guess it works, because you can say March 3rd would have been the actual day. The high might have come in on March the 7th. So maybe you've got a inverted head and shoulders. I don't know. In any event, let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How you doing today?
I just want to know, where do you think Intel can go? Can it go higher, or did it hit you remember you were predicting where it would go?
Well, let's take a look at it. So Intel out here, the semiconductors has just simply been on fire, and it's done it, Victor, without really Intel, which I think is one of the top 5 weightings inside there. If I put up the SOX, in fact, the SOX It's kind of a really interesting index when you take a look at what it did yesterday. It didn't move lower. It just formed, what looks like a little spinning topish type candle out here. And today, it's on fire. It's moving higher. It's doing that on less relative strength, but that doesn't mean anything until you see a reversal signal. So you've got the actual index, semiconductor index, which is on fire, continuing to push higher, taking out resistance. It had a nice big bearish engulfing candle on March the 13th, and all of that's been done without Intel participating. So Intel, if it does participate, is really going to go ahead and lift the tide. So Intel ought to at least come in, test out its falling window. It's gap down. And, Victor, that would be the high, would be $25.86. So about another 45 cents will give us some type of indication as to what Intel wants to do. Now, if it can approach that area with volume, let's go take a look at volumes out here. Now, are you in Intel at this stage, or no?
Yeah.
Okay.
I was wondering, does it have anything to do with quarterly expirations tomorrow?
As far as today's move inside Intel, I don't know. The person to ask on that would be David White. So my recommendation for you on that is, if you were to call, the reason is because David has a tool where he can tell you, based on options expiration, where an equity is likely to go ahead and close out there. So I would call David back at 2. But this is going to run into some resistance. You're inside the swing point, not the swing point, the downdraft from January 17th. Now that was down with big volume.
Earnings day.
Was that okay? Yeah. So big volume on that session, 112 million shares, and you're in it nicely today, but you've only done 11 million shares in an hour, so it's not going to have that kind of volume. I would expect this to run into resistance around 25.86, but if it can close about 25.86, it says it will go ahead and close the gap and get up to about 26.74 out there. So it does look pretty nice. It's taking out a B point here. It's trying to do that today that has 30 million shares. So if this thing can keep up this volume at this pace, it looks pretty bullish. You just got some significant overhead resistance up top, about 40 cents higher.
Thanks.
You betcha. Thanks so much for calling. I was Victor from Paramus, New Jersey. I was taking a look at Intel, and that to me is what is amazing. Now I think Intel. I don't know who the lead. I haven't looked at the SOX index in a while to see what the weighting structure is, but I'm fairly certain that Intel is in the top 5, and Intel during that entire move of the SOX has done virtually nothing out there. But that index, as we were taking a look at it using the Rhodes momentum indicator signals out here, I mean, this thing, that was another reason as I was taking a look at what was going on around the 2:30, 3 o'clock time frame yesterday. And this market is not going to go lower without the SOX index also starting to give it up. And the financials. That was the other thing. I was looking at the financials yesterday. During most of the sell-off, that being the XLF, I was really considering taking a long position inside of the financials, because during the market moving lower yesterday, the financials weren't exactly giving it up. And you can even see when you take a look at yesterday's candle session, a spinning top doesn't qualify as a doji candle. And look, it is really important to get your candles correct. When you take a look at the sign builders out there, the bulls and the bears, look, the worst thing that I've seen is improper use of candlesticks, because if you're using candlesticks to help you to identify the message of the markets out there, you don't want to get that communication language wrong out there. You just don't want to do that. So in the case of the XLF, it's trading into its resistance area. Its resistance, quite frankly, happens to be the candle session from March the 10th out there. That says resistance inside the XLF is at 22.50 out here. You're at 22.39. We got a nice Rhodes momentum buy signal on this. That took place on March 18th. So yesterday I kept looking at it, say, should we go long the FAS out here? We didn't, but let's go back and take a look. Let's go take a look at volume, because it's moving into this swing point. So let's go look at the XLF. Let's go see what it's doing here on a daily chart. So if we take a look at volume, and I was looking at some of the individual stocks with inside the XLF as well. So the swing point high is 2250. That is March the 10th. So that's really the that's the true swing point out there. It's only got 23 million shares. The XLF's done. It's done 35 million shares today. Even if we go ahead and we use the prior session, which has got bigger volume, that has 66 million. In 1 hour trading, the XLF is up with 35 million shares. The XLF is getting ready to try to take out a B point of a large A to B equals CD to the upside. That's what would form out here if, in fact, it can do that. So let's take a look at where that's if it can take out the swing point. That is the high of 2250 from March the 10th out there. In fact, that's a large A to B equals CD up. That'll take you up to 2380. No, I take that back. It won't do that. It'll take you to 2435 if you can bust through that area with some volume out there. So that's inside the XLF. That is on the daily chart out here. So it's going to should at least try for the highs at 2250 or 2237. It's traded up to 2239 right now. What do we want to take a look at? Oh, the VIX index. So what else was saying, hey, what was not right about yesterday? Well, the VIX index. The VIX index here, which is trading right now at the 50-day exponential moving average, it's really giving us a neutral signal here. This is neither, to me, it's neither bullish nor bearish. Yesterday it just slightly closed above the 50-day, not enough to scare me, enough to make me say, okay, you got to be cautious out here. What you really want to see today for any bullish continuation, you want to see a move back below 1488. You're trading at 1486. And I don't mean 1486. I mean get below. I mean get back to yesterday's low out here, which was at about 1389. And then that will go ahead and unleash. So you want to see that from a liquidity standpoint. You want to see the euro, Japanese yen continue to move higher out there. And you want to see things like the XLF, which is the second weighting structure with inside of the S&P 500. You want to see that take out swing points with volume. Let's go take a look at the number XLF is number 2. Let's take a look at number 1 and number 3 out here. Number 1 is the XLK, the technology sector. So let's go see what it is doing. Okay, so we got the XLK trading into its swing point, which is March 7th. 7 million shares out there, and today it's done 1.5 million shares. 1.5 million shares. We've traded for an hour. If I do the math, you're coming into it with similar type volume. Now, I don't know what the volume's going to look like here for the next 4 hours or so, but right now the XLK is moving up with some volume, and the XLK off of the low on Monday gave perhaps the largest bullish sign out there because it came off of that low from Friday, and it came off of it with some nice volume to the upside. That spike was 16 million shares to the upside going into that so-called downdraft session. It only had 9 million shares, and again, this is the number 1 weighting structure inside of the S&P 500. The number 3 weighting structure is the healthcare sector. I think I've got it right. 1 is technology, 2 is the financials, and 3 is healthcare. Now, the XLV, not doing a whole lot today. Just trading sideways, not really providing a whole lot of information to us. The swing point had, from March 6, 14 million shares, and it traded up into that level yesterday with only 8.5 million shares. So not too enthusiastic about the XLV. As long as we're in the X's, not everybody likes the energy sector. So let's go see what the energy sector here is doing. It's trading at 86.92. Not as bullish as the financials or the technology sector. Dow's up 67. S&P is up 6. Be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Masters Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 49 points right now. S&P is up 4.5 points. Let's check in on Chipotle Mexican Grill, up $12.50. It's up 2%. It's trading out at $6.09. Even Steven, it's doing it on less relative strength out here, but no bearish reversal sign. It's a weekly chart that we're looking at. Oh, I didn't mean to do that. Son of a gun. Well, that's why I have backup of things out there. Actually, just closed out the chart. So, no, it was not your screen that closed it out. It was mine, but I'll get that back up there. I've got the A to B equals CD price projection. So I'll tell you what that is. As soon as this thing fires, oh, there it is, fires. There we go. So there's the A to B equals CD price projection. Now, this is a weekly chart. It's a confirmed A to B equals CD to the upside. Now, the A point on this is starting all the way back down at its lows here back in 2008, November 21st, week of November 21st, 2008. 3686 is the number. Makes a move up to April, makes a move up through April 20th, 2012, 4.8 million shares up at the B point, 441.78. Nice cascading move to the downside, a retracement. Normal retracement. If we take a look at it, about a fitness case here, it didn't make it to the 0.618 level. Looks like it made it to about the 50% area. Nonetheless, when it crossed the B point, it did it the way you'd like to see a B point crossed, and that is wide price spread, accelerated volume. If you take a look at it, Again, we're benchmarking the April 13th level, about 3.6 million shares. Well, take a look at when it takes that out. Wide price spread. How do we know that? Take a look at the candle, the wide bar out there. About a type 1, if 1 being the strongest out there, and with volume, 4.9 million shares. So the 1-to-1, A to B equals CD on Chipotle. We'll take it to a price level of $6.40. 20. Looks like that is where it is headed to. However, I would have to say that the move here off of these lows in October of 2012 is stronger than that first leg. And that says, which is hard to believe, over time, Chipotle wants to try to make its way up to 750. Oh, blank chart? Got it now. Okay, great. $750, $749.29. But the first move should take it up to about $639 out there, and that is on Chipotle. To the downside, what do we have? X1. Let's go check out X1. That's the largest percentage move to the downside right now. XONE is the ticker symbol, one of the 3D companies out here. Let's put this on my screen. Let's go ahead and see what it is doing. So it's trading into a swing point out here. We'll see if this can stop its descent. If not, it's going to create a, well, this might already have an A to B equals CD to the down. Did it complete this? This is coming off the highs here back in August of 2013 down to the lows on October 3rd, 2013. Yeah, the 1-to-1 would complete at 33.48. And I believe that beat point was taken out with volume, 741 versus, 1.4 million shares. So now that 1.4 million share swing point low, which is February 5th, that's where price is trading into. And it's doing it today with volume, already 806,000 shares. So the low on X1 should be tested, 37.80. More likely that low will get broken, and you'll see price move back to probably 33.48. But no reason that it can't come all X1. No reason that it can't come all the way back to a 1.272 A to B equals CD down and come all the way back to its IPO date from February 7th. I hope no one out there in our listening audience rode this from $23.50 to $79 and is riding it all the way back down. That's why we use stops. That's why we let the market go ahead and take us out, and that is what I suggest you do. So I'm going to take you out to the next trading session. That's going to be hosted by our man Basil Chapman. It is Terrific Thursday. Thanks so much for joining me. I think Basil will probably be doing a 2-hour session here today. So we've got the Man of Steel. He'll be up next. And then we go out to Daryl Martin, David White, the Andy Heck Show, and the Tom O'Brien Show from 4 to 6. Have a terrific Thursday. Thanks so much for joining me, folks. Talk to you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.